There is a question almost no trading psychology content ever asks you. Every video, every course, every book in this space wants to know what's wrong with you. What's your weakness? What's your trigger? What's the flaw in your behavior that's costing you money? And that question has value, but it's only half of a much bigger picture. And most traders spend their entire careers stuck on that one half without ever realizing there's another side to it. The question almost nobody asks is this: what happens to your trading when you stop hunting for what's broken and start paying attention to what's already working? That question comes from a field of psychology that spent decades studying something most of clinical psychology had ignored. Not dysfunction, not disorder, not what makes people struggle. It studied what makes people thrive, what conditions, what mindsets, and what internal states actually produce sustained high performance and genuine well-being, rather than just the absence of problems. It's called positive psychology. And by the end of this video, you're going to understand exactly how this field applies to trading in a way that almost nobody in this space talks about, and why ignoring it might be the reason your improvement has felt so slow. Even when you've done real work on your weaknesses, I'll also show you the specific shift you can start applying in your very next trading session. Let's start with what positive psychology actually is, because the name alone causes most people to misunderstand it. When people hear positive psychology, they often assume it means something soft, positive thinking, optimism, telling yourself things are going to be fine. That is not what this field is, and that misunderstanding is exactly why its real insights rarely make it into trading content. Positive psychology is a serious, research-based branch of psychology that asks a structural question. Instead of only studying what goes wrong with the human mind, what if we also rigorously studied what goes right? What if we studied the conditions under which people experience genuine flow, sustained motivation, resilience that doesn't collapse under pressure, and performance that holds up over long periods of time? This shift matters more than it sounds. For most of the history of psychology, the field built its understanding of the human mind almost entirely by studying dysfunction, anxiety, depression, trauma, disorder. And that research gave us enormously valuable tools for fixing what's broken, but it left a massive gap. It told us very little about what's actually happening inside someone who is thriving, performing at a high level, and sustaining that performance without burning out. Positive psychology stepped into that gap, and it found something that should matter enormously to every trader watching this video. Sustained high performance is not simply the absence of weakness, it's the active presence of specific internal conditions, conditions that can be identified, studied, and deliberately cultivated. Trading psychology content has spent almost all of its energy on the first half of that picture, fixing weakness, and almost none of it on the second half. That imbalance is what this video is here to correct. Here's the first concept from positive psychology that applies directly to trading. And it's one that explains a confusing experience almost every trader has had. It's called flow. You already know this feeling, even if you've never had a name for it. There are sessions where your decision-making feels almost effortless. You see the setup, you act, you don't second-guess yourself, and afterward you can barely describe what you were thinking, because you weren't really thinking in the effortful, deliberate way you usually do. You were just executing cleanly with a kind of quiet confidence that felt completely different from your normal trading state. And then there are sessions where every single decision feels like wading through mud. You're staring at a clear setup and somehow still hesitating. You're overthinking entries you normally take without a second thought. The exact same skills you have on your best days seem to have vanished. Positive psychology research on flow states identified specific conditions that produce that effortless. Tends to emerge when a challenge in front of you closely matches your skill level. Not so easy that you're bored, not so difficult that you're overwhelmed. It requires clear, immediate feedback on whether your actions are working, and it requires a level of focus undivided by competing concerns, financial anxiety, emotional distraction, fear of a specific outcome. Here's what this means practically. If you've been blaming inconsistent discipline for your bad sessions, you may be misdiagnosing the problem. Some of your worst sessions may not be failures of discipline at all. They may simply be sessions where the conditions for flow were never present, you were trading a setup poorly matched to your skill level, or carrying psychological noise that fractured your focus before you even opened the chart. The practical shift here is to stop treating every session as identical and start noticing the conditions present on your best sessions versus your worst ones. Were you rested on the good days? Was your setup criteria crystal clear, or were you working with ambiguity? Was something in your personal life pulling at your attention on the bad days? Once you start tracking the conditions instead of just the results, you can begin deliberately engineering more of the sessions that produce flow rather than hoping it shows up randomly. The second concept is one of the most well-established findings in all of positive psychology, and it directly contradicts how most traders approach their own development. It's called the strengths-based approach to growth. For decades, the dominant idea in performance development, in sports, in business, in education, was that improvement comes primarily from identifying your weakest areas and grinding on them until they're no longer weak. Find the gap, close the gap. Repeat positive psychology researchers studied this assumption directly, and what they found complicates it significantly. Across multiple domains of performance, people who built their development primarily around amplifying their existing strengths showed greater engagement, faster skill development, and more sustainable long-term performance than people who focus primarily on fixing deficits. This doesn't mean weaknesses don't matter. Severe weaknesses that actively block performance still need attention. But beyond a baseline level of competence, the highest leverage for growth often comes from strengths, not from an exhaustive list of flaws. In trading, this finding has a very specific application. Most trading psychology content, including a lot of what gets produced in this exact niche, operates entirely from the deficit model. Find your psychological flaw, fix your fear, fix your impatience, fix your revenge trading. All weakness, all the time. But here's the question almost nobody in this space asks: what is your trading already good at? Not generically, specifically. Maybe you have an analytical mind that performs beautifully in calm conditions, but that you've never built a process specifically designed to protect and utilize. There's a recently released book that takes this exact idea and builds an entire structured framework around it, Positive Trading Psychology by Brett Steenbarger, a clinical psychologist who spent over 20 years coaching professional traders. If this concept resonates with you, it's worth a deeper look, and I've covered it in more detail in another video on this channel. But the core insight is one you can start applying today without reading anything. Stop only asking what's wrong with your trading. Start asking with equal seriousness what's already working and how you can build more of your process around that. The third concept from positive psychology that applies directly to trading is one that will probably be the most uncomfortable to hear because it cuts against a deeply ingrained habit in this industry. It's called the Broaden-and-build theory. And it has to do with the actual function of positive emotion for a long time. Emotions like fear and stress were assumed to be the primary drivers of useful action, the idea being that fear keeps you alert, stress keeps you sharp, pressure keeps you performing. Positive psychology research complicated this picture significantly. It found that negative emotional states like fear and anxiety actually narrow your attention and your range of possible responses, useful in a genuine emergency requiring an immediate single reaction, but actively harmful in situations requiring flexible thinking, pattern recognition of evidence, which is, of course, almost exactly what trading requires. Positive emotional states, by contrast, were found to broaden attention and expand the range of options a person considers. People in a calm, genuinely positive state were shown to think more flexibly, notice more patterns, and generate more creative solutions than people in a fearful or anxious state. Here's why this matters so much for you specifically. Most trading psychology content implicitly treats fear and stress as tools, something to push through, something to manage, something to tolerate on the way to good decisions. But the Broaden-and-build research suggests something closer to the opposite. Fear and chronic stress are actively narrowing your trading vision while you're in them. They're making you see fewer options, consider fewer variables, and default to narrower. More reactive responses, exactly when trading requires the broadest, most flexible thinking you have. This reframes the goal of trading psychology work. It's not just about tolerating fear long enough to execute your plan. It's about actively cultivating calm, genuinely positive states before and during your sessions, not as a nice bonus, but as a direct performance requirement. A trader who has built genuine calm into their pre-session routine isn't just feeling better. They are, according to this research, accessing a wider, more flexible, more pattern-sensitive version of their own thinking than the anxious version of themselves ever could. Let's bring these three ideas together into something you can actually use. Flow tells you that your worst sessions are often not failures of willpower. They're sessions where the conditions for high performance simply weren't present, and tracking those conditions lets you start engineering more good sessions instead of hoping for them. The strengths-based approach tells you that an exclusive focus on fixing weakness has a ceiling, and that identifying and deliberately building around your genuine existing strengths, the ones you already have in trading or in life, may produce faster, more sustainable growth than an endless list of flaws to fix. And the Broaden-and-build research tells you that the calm, positive state you've probably been treating as a pleasant side effect of good trading is actually a performance requirement, because fear and chronic stress measurably narrow the quality of thinking available to you in exactly the moments that demand the most flexibility. Put together, these three ideas point toward a single shift in how you approach your own development: less time spent exclusively hunting for what's broken, more time spent identifying the conditions, states, and existing strengths that produce your best trading, and deliberately building your process around creating more of them. This doesn't mean weakness work disappears. Real flaws still need real attention. But if the only lens you've ever applied to your own trading psychology is what's wrong with me, you've been working with half the available toolkit this entire time. Here's what I want you to do with this before your next session. Before you open a chart, ask yourself one question you probably never asked in a trading context. What am I already good at, not as a trader specifically, but as a person that I've never deliberately tried to bring into how I trade? Write down an honest answer. Then ask a second question. What were the actual conditions present during your best trading session in recent memory? Your state, your environment, your level of calm, and how many of those conditions are present right now before you start? These two questions cost you 2 minutes, and they shift your starting point from deficit hunting to condition building, which, according to decades of research into human performance, is where the more sustainable gains usually come from. But understanding your strengths and the conditions that produce your best trading only matters if you can actually access that state when real pressure shows up, when a position is moving against you, when a drawdown is mounting, when the calm, broadened thinking this video just described is exactly the thing under threat. Because knowing what your best self looks like and being able to summon it under genuine financial pressure are two very different skills. So that's exactly what the next video covers. Watch it next, because the strengths and the calm states we just talked about are fragile under pressure unless you know specifically how to protect them when it counts the most.